An interesting situation is playing out at the Federal Reserve following the new Fed chair's first meeting. Here's to explain it all to us is Vice President of Wilsey Asset Management. That would be Mr. Chase Wilsey. Chase, welcome back to the big show.
Thanks for having me.
All right, so the first meeting for Mr. Warsh, the market crashes in response to his, everyone was, I think a lot of people were thinking, oh, he's going to cut interest rates right away. No, and in fact, he hinted that maybe interest rates might have to go up. Yeah,
and I think there was a lot of hype around this meeting, obviously, and I think people were reading into the details a little bit too much. I mean, he did say, yeah, price stability is something that they want to achieve, but I mean, you gotta kind of take a step back here first in my mind, and people have said he's a great political operator. Do you think it would have been a good idea for him to go into the Federal Reserve, who's already questioning maybe if we should lower rates or not, and say, we're lowering rates? He would lose all credibility within the Federal Reserve. So I think he's playing it smart here. I think he's taking it slow. I think we know that now he's introducing 5 new task forces to actually kind of understand a little bit more about what's going on in the Federal Reserve, so he can actually, I think, guide policy in the direction he wants and kind of build that trust within the Fed.
Elaborate on that. Why is that significant? Why is that as important as interest rates?
The task forces,
or
which part?
Yeah.
The task forces are important in my mind because he said price stability is key. One thing they're going to be looking at here, or 2 things I should say, is the impact of AI and its impact on inflation. Also, too, they're going to be looking at data sources and how should we be reviewing that. He has said he's not the biggest fan of core PCE, and there might be other data sources to look at. So if 2% is the target, maybe 2% for PCE is not the target, but another inflation gauge. So we might be closer to that 2% level than people realize. And I think he's doing a really good job of kind of easing into it, establishing the Fed as he wants to run it without just coming in full steam ahead.
How does the fact that Jerome Powell is hanging around, if you will, for lack of a better term, he's not doing anything illegal, you're allowed to stay on if you want, but how does, it's rare.
It's very rare. So it's the first time since 1951 that this has occurred. So not a very common occurrence.
How does that make his day harder?
I mean, it definitely makes it harder because you have to realize that Powell's been in charge for so long. I kind of use this analogy. It's like if President Trump were to become vice president after his term, who really has the power there? Now, Trump is a much stronger personality than Powell, I'll say, but that concept should kind of sit in your mind that the Federal Reserve members, they still respect Powell a lot and view him as the previous Fed chair. So there is potentially that power struggle. Now, they said there's not, but you got to question
what
that
else
in the
are
back
they
of your mind.
What else are they going to say? And how long does he linger for? I mean, is he just waiting to see if he's going to get indicted on the building costs?
That's my estimation. I think once this all clears, I do think he will remove himself. I don't think he wants to stay there, but I think he wants to make sure the coast is all clear, so to speak.
Protect his hind end and protect his reputation, I suspect.
Exactly.
All right, so looking down the road, bringing it back to interest rates, I think that's where we all appreciate the Fed. What's going to happen? Will we see the rates go up? And if they do, what will that do to the economy?
So it was an interesting situation. We saw, 9 of the 18 members actually kind of indicate a potential rate hike. 18 members. Warsh did not submit a dot plot because he doesn't really believe in the dot plot, which is a whole nother debate there.
Explain what the dot plot is.
So the dot plot is actually how they kind of project out interest rates. And Kevin Warsh has said, I want to get out of the business of projection, essentially, and look at the data and actually make real-time decisions. And you look at the dot plot over the past, it has not been a good guide. They've been so off so many times. So it's not a viable resource in my mind, and I think Warsh is kind of saying, I want to change that as well and get rid of that outlook so we can actually have more substantial Fed meetings. And he kind of equated to a family fight. He wants everybody to come in and have different viewpoints so it can really iron out what they view as the best Fed policy. But right now, as I said, there's a couple, or 9 of them think we should hike rates. I'd be shocked by that. I don't think that's going to happen, especially under a Warsh-led Fed. I think base case, you're looking at no movement through the end of the year as Fed, again, as Warsh comes in to kind of establish his Fed. But the big question mark is oil. Now hit about $70 a barrel on WTI this morning. That was a big question mark for inflation. If it stays around there, we could have a path to maybe 1, maybe 2 interest rate cuts by the end of the year.
Then Katie, bar the door, because that could get it really interesting.
It could get very interesting.
All right, those dot plots, man, they're obsolete the second they come out. And if we graded those things,
F. That's an F.
it would look like my college transcript. All right, Chase, thanks for rolling in, and take care, okay?
Thanks for having me.
All right, there is